With that, we have Sumaira, who will join us with a guest in the Mutual Fund Corner.
Mangalam, thanks very much for that. Feroze Azeez of Anand Rathi Financial Services joins in now to answer all the mutual fund queries that have been coming in. But Feroze, before we get talking about individual queries that have come in, yesterday we got the mutual fund inflows data for March. So let me just quickly take you through it. Equity plus ELSS, that's the headline category, that has grown to about 11,756 crore. And you can see the kind of jump actually that we've seen from say December, Jan, Feb, which were a bit of slow months. From there we're back to those 12,000 crore odd monthly figures. Balanced fund, hybrid funds over here, the outflows continue, although this time around it looks like the outflows or redemptions have actually picked up pace. So we were seeing about 1,000 crores plus of redemptions for the last 2 months. This month it's 3,000 crores plus. The rest of the data is pretty much in line with what was being expected, but SIP flows, look at that one. Now this is a number that has been steady through and through all, in the last 1 year. This time around we're seeing a marginal dip. Now a lot of the experts have been saying that this bit of a blip that has come through is not something to worry about, although I would say that, I'm going to at least keenly watch out for those over the next few months if there is some pressure on SIPs. But, you speak to a lot of individual clients as well. Is this, is this fear warranted that there could be pressure on SIPs in the coming months?
See, I think as you spoke about all this data, it is very evident that logic is prevailing. Balanced funds are not a good investment because tax efficiency has gone away. Equity mutual funds should definitely be a part of one's portfolio, and people should not wait out till the election results are out. And that I think is very logical. Liquid funds in March are negative generally because of the liquidity tightening in the industry. SIP, when it comes to this marginal blip, I think we have lesser to worry because the markets have shown signs of recovery. Unfortunately or fortunately, the first time investors always invest through an SIP kind of a route. So what happens is if they see negative return on their investments, they get a little jittery and then start questioning their investment itself. So I think now that the markets have turned around, there are quite a few 1-year SIPs and also 2-year SIPs showing reasonable gains. I think now we have that fear a little behind us. If the trend of the market fall continued for the next 6 months, I'm sure the SIP numbers wouldn't have looked as healthy, and the drops could have been substantially larger than they are, which is just about 40 odd crores of drop on a base of 8,000 crores is just about 0.5%.
Okay, with that, let's invite some callers in then. Nikhil Jain is on the line with us from Mumbai. Hi, Nikhil. Good afternoon to you. How can we help you?
Hi, thank you for selecting my questions. I have shared my portfolio and my goals with you. So I need your little advice. So I have allocated each fund against each of my goals. So I need to build a corpus of 20 lakhs in 16 years. For that, I'm investing in Kotak Standard Multi-Cap Fund. For 50 lakhs in 20 years, I'm investing in Mira Asset India Equity. And 1 crore in 26 years. For that, I have Axis Mid-Cap Fund. And 7 crores in 30 years. So for this, I have 3 funds. One is small L&T Mid-Cap. One is HDFC Small Cap, and one is L&T Emerging Business Fund. So I just want to know how these funds are looking to you, and I'm investing 5,000 in each of these funds. So total monthly I'm investing 30,000. So is this SIP amount is good enough to achieve my goals, or do you think any changes I need?
Okay, well, Nikhil, you're doing a lot of things right. One is that you have clearly marked out, goal with its duration as well as the quantum that you like to receive. As well, your portfolio is not overly diversified, so you have a very, very clean-looking portfolio. Feroze, in terms of the investment that he is making, is that enough? Does he need to step it up? And is it in the right funds?
I think the third thing also is got right. I think he has done his planning reasonably well. So if he continues these SIPs, the goals which Nikhil mentioned are expected to be met in mediocre return situations as well. You don't need a windfall gain to achieve these returns. So point one is even with these kind of investments, you will be able to achieve all your goals. 2 funds which might require more vigilance. Let me highlight. The fund selection has been reasonably good. So one is L&T Business Leaders Fund. fund is one thing which you have to keep a watch on. Axis mid-cap fund is one more fund which you will have to hold, but be more cautious about these two funds. Of course, the past performance of Axis mid-cap has been stupendous, but I think from a future perspective, the potential for the basket of shares it holds is lower relative to the other baskets. So keep a closer eye on these two funds. Otherwise, I think, Nikhil, you've done a wonderful job and an inspirational one for the rest of the viewers.
Okay, Nikhil, does that work for you? Anything more that you want to ask?
So that's one more query. So recently I came to know that Mira Asset India Equity Fund has been moved from multi-cap category to large cap. So should I continue in that one, or do I need to put any multi-cap fund in my portfolio?
See, what happens is Mira Asset India Equity Fund, largely managed by Nilesh Surana, was always skewed towards the large cap. It had the flexibility to move towards mid and small to in a certain proportion. But I think you should continue that fund. I don't think it will dampen. This decision of moving categories is going to dampen the fund or the strategy, because in effect they were doing largely the same thing. Of course, now coming into the large cap category, they will now be mandated to have 80% of their money in the top 100 stocks, which I think will not change the portfolio dramatically. So continue with that fund. I don't think you have much to worry about, because the fund management team is strong enough and they will take prudent decisions on the other segment as well.
Okay, Nikhil, thanks very much for calling in. Our next query comes in from Mr. Mohan Singhania, who's written to us from Gujarat. So he is 46 years old. He's currently investing about 8,000 rupees in 4 funds, which is the HDFC Midcap Opportunities Fund, HDFC Focus 30, Aditya Birla Sun Life Dividend Yield Fund, Franklin Templeton India Smaller Companies Fund. Okay, I believe he's on the line with us. Hi, sir, can you hear me?
Yeah, hi, good afternoon.
Sorry, I just read out your portfolio. How can we help you?
I made slight change in my portfolio. I have added SBI Magnum Multicap and I have added ICICI Pru Blue Chip.
Okay.
And I have discontinued my Focus HDFC Focus 30 fund.
Okay.
So is my portfolio balanced, or some changes have to be made in that?
Okay, and the reason you're investing is for your son's education. So in how many years would you need the money? And how much?
Around after 10 years probably.
And how much do you need?
Investing in around 1 crore rupees.
Okay, so 1 crore in 10 years. Okay.
I've been investing since 2011.
Okay, Feroze, yet again, it's, not a overly diversified portfolio. So he just has about, 4 or 5 funds over there. He's chosen the growth option and all. Is he on track, and any sort of changes required in the portfolio itself?
I think he's at the age of 46. Mr. Singhania, you should also have a strategic asset allocation desired. I think looking at the contemporary situation, 65-35 is a good asset allocation, point 1. That could be a good starting point for you to decide what money goes into debt and equity. Point 2, your fund selection requires some degree of improvement. You have moved into an SBI multi-cap fund, like you just said. The SBI multi-cap fund has a strategy of having several analysts together managing the portfolio, and I think that has done well. So you can definitely continue with the new investment which you've just started. But I think you should look at some other funds which can be changed from your current holding. One of them would be SBI Focused Equity. You already had a Focused Equity, you've changed that. Focused Equity is a very good category to be in, which has been carved out recently. I'm very bullish on that category because you have high conviction fund manager bets. So one of the best categories, I would say, little known, is the Focused category. In that, SBI, which is managed by R. Srinivasan, is the best fund in those 15-17 funds in that category. So that you can definitely start with. Invesco Mid and Small Cap is a good fund to start with. And you can also look at Invesco India Growth Fund let me correct myself, that these are the 2 funds which you can definitely add to your portfolio.
Okay, Mr. Singhania, anything more, sir?
Yeah, no, thanks a lot. Thank you very much. Thanks a lot. Thanks.
Okay, all the very best. Thanks so much for calling in. We'll take a very quick break on MF Corner. We'll be right back. Feroze stays on. There are lots more queries to answer. Stay tuned. Hi, welcome back. You're with the MF Corner, and I have Feroze Azeez of Anand Rathi Financial Services, who's here to answer all the queries this afternoon. And our next query comes in from Mr. K. Nandakumar, who's on the line with us from Mumbai. Hi, Mr. Nandakumar. Good afternoon. What's your query, sir?
Good afternoon. I am 62 years old. I have invested some amount in some six or seven funds.
Okay.
This is for wealth creation only. The extra fund I have invested here. So whether this investment is correct or not?
So how long have you been investing in these funds?
Minimum 5 years I will be there.
No, and in the past, how?
After that, if required, I will take it. Otherwise, I will not take it.
Okay, so you need this money at the end of 5 years, right?
Maybe.
Okay, and do you have any idea of how much you're looking to accumulate?
Pardon?
How much money would you need at the end of 5 years? How much are you looking to sort of
No, it
collect?
is only creation. I expect some more than the bank interest, at least 12 to 14%.
Okay, Feroze, so there are 5 funds that I can see: Axis Blue Chip, SBI Blue Chip, Kotak Standard Multicap, Canara Robeco Emerging Equity, Tata Equity PE. So about 10,000 rupees in each. So that's a substantial amount of investment that's going in. He can, keep it invested for the next 5 years, at the end of which he expects a reasonable return, better than bank interest, like he said. Is he on track? Is there any fund that should be sort of changed or replaced?
Yes, I think there are some changes needed. Point one, I think his expectation is fair. Anybody who takes the risk of equity, should he get a 12 to 14% return in the long run? To my mind, yes. So I think your expectations are bang on. I don't think you're expecting too much from equity, point one. Point two, if you stay invested for the long run, I think it will help you reduce your risk considerably, because you're comparing it with a fixed deposit, which is not a apple-to-apple comparison. But to make sure that it's lesser on risk, you will have to be patient for 4 or 5 years. Point three, the funds which require a change, of course, are one is Tata PE fund, which requires some change, because that fund works on a concept of moving money between equity and debt as per the market's price to earning multiple. So that's one unique concept, but if that concept is good, that needs to be it should be applied on the entire portfolio. So Tata PE fund should be an exit. It should move to a Mirai Asset India Equity fund. You can definitely look at exiting the other fund, which is the SBI Blue Chip fund, managed by Sohani. I think that fund can be very well replaced by Reliance Large Cap. I think 2-3% extra return is possible over the next 4 years on Reliance Large Cap, and you can continue to hold the Access fund. I think that requires more monitoring, but I think as of now you don't have to exit it.
Okay, Mr. Anand Kumar, does that work for you, sir? Okay, I think we don't have him on the line anymore. Up next, we have a query from a Twitter user, Yash. He says that about 4 years ago, he started a SIP in the Reliance Equity Growth Fund, where he was investing about 10,000 rupees a month. As of today, he was getting about 25% CAGR. So his question here, and this is pretty interesting, Feroze, he wants to know, should he withdraw the fund and re-enter after there is a correction in the market, or continue with SIP irrespective of market volatility? So it seems to me like he's a bit of a trader mindset, but like we've been saying, stocks and mutual funds are two different investments, so don't even try and mix one or the other. Nevertheless, a lot of investors, I mean not just Yash, they get scared of market downturns, which is when you and advisors actually recommend remaining invested, right?
Correct. I think one is in the bad market, somebody is saying that he has made 25% CAGR is a great news. So you're one of those lucky guys who have actually stayed invested 4 years, and you've begun sooner. Now when the markets are at a stage where they're at their peaks, of course this thought definitely creeps into a mind of an investor. So I don't think you should do that, because if an investor gets out, and if there is no correction as the market goes up 1,000, 2,000 points, then you're out of the market forever. This has happened to several investors, so that's why you're always recommending people to stay invested. There was one investor who said, I want to exit at 10,000 levels just a couple of months back, saying that I'm seeing 9,000 levels. Yeah. If he would have exited, he would have missed the rally of 10,000 to 11,600. Now he doesn't know what to do. Now he can't come in, he can't stay out forever. So that gets you into a catch-22 situation. So stay away from it. If you're doing an SIP, already you're reducing your risk, but don't be in one fund. Have 5 funds, do a systematic investment. That's good enough risk mitigation than a market timing. So instead of market timing, disciplined, diversified investment, optimally diversified investment is a better strategy.
Okay, our final query comes in from Mr. Brajesh Kumar. He's 66 years old, retired. He has MF holdings spread across all categories of debt funds. About 50% is in short-term funds and the rest is in long-term funds, as well as PSU banks. I'm assuming okay, what he means is perhaps a sectoral fund, I'm not sure. Credit risk, low duration and the like. So he wants to know if he should change his strategy now.
Yes, so I think one is if you have been into accrual funds and short-term funds and also bank PSU debt funds, which only focus on bank PSU funds, BNSU bonds, then you've done a good job. At the age of 66, you are having a prime requisite of preservation in your objective list. That's great, Mr. Brajesh. So the second point is what are the opportunities on the debt side, which are very relevant not just to you but all viewers who are retired, is because of the risk aversion after the ILFS episode, the credit papers are quoting at a very, very attractive yield. A good fund manager can definitely capitalize on this situation, and in that category, Santosh Kamath, who is Templeton's CIO on the debt side, is the best one to capitalize on this lower risk appetite, giving a higher yield on debt funds. And so take credit risk funds into your portfolio. Franklin Templeton Dynamic Accrual Fund is one of my favorites because it can give you a double-digit return on a 3-year basis. And then you can also look at an ICICI regular savings, and lastly you can of course look at a Reliance Reliance Credit Risk Fund. These are the three funds which could give you that 1.5-2% fillip over a AAA fund after the expenses are deducted.
All right, well, on that note, Feroze, thanks very much for dropping by. And we need to wind down on MF Corner, but here's a quick look at a Network 18 initiative. 90 crore voters have the power to choose a government that they want, elect 542 representatives who will speak up for them in Parliament and help drive the country forward. But even 70 years down the line, India has never had 100% voting. Almost a third of the eligible voters don't vote. Can we have 25-30 crore Indians not voting? So News 18 has taken it upon itself to reach out to its audience of nearly 70 crore viewers to encourage them to vote. It is our country and it is our duty.